Cheat code enabled, how we don't pay any tax. Caveat to this, we're not trying to evade tax, but wouldn't it be nice to avoid some of it? And this is all because we are going to sideline a taxable event. Well, what is a taxable event in the first place? Well, a taxable event is a specific moment in time where something becomes taxable, and that moment in time is called a taxable event. For example, when you buy a property at 100,000, you put 20 grand into it and you sell it for 150, that sale or the activation of that £30,000 profit is a taxable event. So what if we don't sell it? What if we actually get money back in our account without activating that threshold? And we do this through something called refinance. Okay, so what is that, Jamie? Well, refinancing is when we get a new debt, or in this case, mortgage, on the property. Okay, this is boring, right? Well, let's make it a little bit interesting then. So let's say we've got a £100,000 property. So if we purchase a property at 100,000, not a lot's happened, right? And we think, well, I'm going to make my money through a few different ways. Well, I'm going to get some cash flow, right? And cash flow's fun, apart from the fact, well, with interest rates higher, that's getting squeezed and squeezed and squeezed. So let's say you made £3,000 per year profit, okay, net. Well, that's sexy, that's cool. It's like, well, depending on where you've got that. If it's in a company, you're going to pay around 600 in tax. Corporation tax is 19 to 25%, depending on what range you're at. If it's in your personal name, that could be up to 40%. So what you're going to end up paying on that is 1,200. And in fact, that's not even how we make our money through property. So what happens over time in property is we have something called capital growth. And this is the sexiest part of the unspoken ways of how we make money in property. So let's say at some point in the future, it's gone up to 150,000. This is the new value through the economics of supply versus demand, which I find incredibly interesting, but you might not. Basically, when more people want to buy something, then there is something available. The prices must go up through time. And that happens continuously in the UK property industry because we're this tiny little island, barely build anything on it, and we're so undersupplied in the property market. So how do we access that 50k? Well, one of two ways. We could either sell it or do what I just said, refinance it. So if we said we're going to sell the property, let's assume there are no fees whatsoever, okay? Now, I know that's not real, but just for example, if we sold that property, we're making that 50k profit, right? Well, if we sell it and we make £50,000 profit, how much tax will we typically pay? Well, best case scenario, 20%. So that means £10,000 has just gone to Mr. and Mrs. Taxman. Fantastic. Exciting, right? Well, not really if we don't need to do it. So what we've got is 40,000 net after tax, and we don't have the asset anymore. But what if we could keep the asset and get paid our 40k? So I've not really figured out how to get 40k, but I can get you close. Now, what we can do is refinance. And what I want us focusing on is this additional 50,000, because the 100k is the same finance as before, or it's just replaced by the new one. But what about this 50,000? Great, can I just get that from a mortgage, Jamie? No, not quite. All right, my voice went really high then. No, not quite. But what we can do is get something called loan to value. Now, dependent on what you're using the property for, I'm going to make the assumption it's buy-to-let property, by the way, you're going to get 75% loan to value. What that means is the bank will give you 75% of this new uplift. Well, 75% of 50,000, you could do the maths on your own, is 37,500. Now, is it 40k? No, well done for noticing. But what you are getting is 37,500 tax free. And the reason for this is it's technically not your money, it's technically not profit, it's a new loan against the property. and there's no tax to pay on loans. So you might go, oh great, I'm just taking on debt. It's like, well no, because of inflation, it's eroding the debt that you're taking on already, and because of the value of property that goes up through time, the rentals also go up through time. So actually the increased rental pays for the additional debt. And what can you do with that $37,500? Well, if you want to take it out of your company, talk to your accountant on sophisticated ways of doing director's loan accounts and things like that. But if you're anything like me, you're going to want to buy more and more boring, vanilla buy-to-let properties. Now, I know there's going to be some people go, but what if it goes down in value? Well, it can go down in value, and it will, months and months and months. But over time, it goes up and up and up. The UK average is 7.9%. But even if you applied 5% as a conservative estimate, that's really going to increase it. So if we went to our original 100k property, and we went up 5%, that's £5,000 every single year. Once we're at 150k, which is the new valuation that we went through here, we're then increasing at 7,500, which is 5% of the 150. Now you might be thinking, well, how does that work? Is it not in the 100? Well, no, because of something called compounding, it's 5% growth annually, and then it grows and grows and grows and compounds and compounds and compounds, tax-free money in your bank account. So this is all amazing, I hope anyway, but it's also how the billionaires do it. And you might think, oh my God, no, surely not. Well, actually, yeah. If you think somebody's got $1 billion of assets, let's say you are a billionaire. What a lovely thought. Let's say you're a billionaire and you need access to, I don't know, you just want to buy another yacht for 50 million, you know, as you do on a Saturday. And you go, right, I want to buy this. Well, you don't go, right, I'm going to sell 50 million pounds worth of assets, do you? No. How do the rich do it? They go to their bank. I doubt it's Lloyd's before you ask. Maybe it's Coutts. They go into Coutts and say, hey, I need a cool 50 to buy a yacht this weekend. Put a lien or a charge or a debenture over 50 million pounds of my property. And they go, no worries, boom, bank's happy, they've got some protection, give you 50 million, no tax whatsoever, the loan is depreciating through the impact of inflation, and they've got tax-free money to enjoy on their liability. So this is what the rich and the super rich do, but they leave out that bit of education when it comes to me and you. And that's what I sort of want to do, is pass on this education. And then the trick is for you is that means we need to focus on the higher capital growth areas in the UK. And that really takes a skill set in itself, because does every area of the UK grow at 7.9%? No, that's an average, which means some areas grow at 10%, others grow at 3%. And that's really going to be the difference between you building your assets. And a lot of people think investing in buy-to-lets is about the cash flow, but you don't have a cash flow problem, you have a wealth building problem. And that's really where I come in. So if you're watching this and you've got 100k or more to invest in property, and you want to find out how to actually find these areas, how to invest in them, and maybe you want me and my team at Aspire Property Group to help you build that portfolio. Well, what we're doing is we're opening up some free one-to-one strategy sessions just for you guys as a subscriber. So if you're not subscribed already, hit subscribe and the notification bell. But if you want the chance for that free one-to-one strategy session, put APG in the comments now and we will be in touch and try to add as much value as we can. So it's APG in the comments now, or click the link in the description and we'll book in that call for you. Hopefully you've got massive value from this, and you can let me know in the comments if there's anything that I've mentioned where you want some more detail around it, maybe a new video around it, because ultimately this channel is for you. As I said, if you did get value, it helps me out so much if you lightly tap that like button. And if you're not already and you want some amazing content around helping you build your buy-to-let portfolio or any other strategy, make sure to hit the subscribe and the notification bell. I'll see you in the next video.